Hi everyone, Ted from LTM Elite Consulting. Today I was going to share with you guys the four behavioral investor types. And this article was written a couple of years, actually a little bit more than a couple of years, in 2018. But I was going to read and explain to you guys. That way you understand what type of investor you are. And let's just go and read this article. The four behavioral investor types. The qualities and biases of preserves, followers, independents, and accumulators. Let's start with the first one. There are four behavioral investor types. We'll publish case studies over the next several months. And I'm going to attach this article with a video in the bottom so you guys can have full access. Number one is a preserver. A preserver is an investor who places a great deal of emphasis on financial security and preserving wealth rather than taking risks to grow wealth. Such investors are guardians of their assets and they take losses very seriously. Preservers are often deliberate in their decisions and sometimes have difficult taking action with their investments out of concerns that they may make wrong decisions or take too much risk. They instead prefer to avoid making decisions and sticking to the status quo. Preservers often obsess over short term performance in both up and down markets, but mostly down markets. And they also tend to worry about losing what they had previously gained. This behavior, consistent with how preservers have approached their work and their personal lives in deliberate and cautious way. The second group is the follower. A follower investor is a passive and often lacks interest in and or has little aptitude for money or investing. Furthermore, follower investors typically do not have their own ideas about investing. Rather, they may follow the lead of their friends, colleagues, or whatever general investing fad is popular to make their investment decisions. Often their decision makes process is without regard to a long-term plan. They sometimes trick themselves into thinking they are adept or talented in the investment realm when an investment decision works out, which can lead to unwarranted risk seeking behavior. Since they don't have their own ideas about investing, followers also may react differently when presented more than once with the same investment proposal. That is the way something is presented, framed, can make them think and actually differently. They also may regret not taking part in the latest investment fad and may end up investing at exactly the wrong time when valuations are the highest. Definitely don't want to be a follower. The third one is independent. An independent investor has original ideas about investing and likes to get involved in the investment process. Unlike followers, independents are quite engaged in the financial markets and they may have unconventional views on investing. This contrarian mindset, however, may cause independents not to believe in the following a long term investment plan. With that said, many independents can do stick to an investment plan to accomplish their financial goals. At their essence, independents are analytics, critical thinkers who make many of their decisions based on logic and their own gut instinct. They are willing to take risks and act decisively when called upon to do so. Independents can accomplish tasks when they put their minds to it. They tend to be thinkers and doers as opposed to followers and dreamers. I lean more towards the independent investor. However, I tend to be very careful not to follow the way my thinking process might go. So that's why I always have a 80-20 rule, which I concentrate in long-term investor slash independent investor. And that's the most important thing for anyone out there. Know what type of investor you are. And it's nothing wrong if you are a follower or independent or if you are a preserver or if you are accumulator. It doesn't matter which type you are. You need to understand the good and bad and then trying to uh, have the mindset of it's okay to become three or four types of investors at once. And that's why diversifying and investing for the long run, it's one of the most important things that anybody can do. And let's read the last type of investor, which is accumulator. The accumulator is an investor who is interested in accumulating wealth and is confident that he or she can do so. These clients have typically been successful in some business pursuit and believe in themselves enough that they will be successful investors. As such, they often like to adjust their portfolio allocations and holdings to market condition and may not wish to follow a structured plan. Moreover, they want to influence decision making or even control the decision making process, which potentially can diminish an advisor's role. At their core, accumulators are risk takers and are firm believers that whatever path they choose is correct one. Unlike preservers, they are in a race to win and win big. And unlike the followers, they are rarely on themselves and want to be on the one steering the ship. And unlike individualities, they usually dig down to details rather than forge a course with half the information that they need. Unfortunately, some accumulators are susceptible to biases that can limit their investment success. For example, they may be too confident in their abilities. Since they are successful in business or other pursuit, shouldn't they be successful investors? And overconfidence sometimes leads them to think that they can control outcome of the investment, even though it may be full of unknown risk. Accumulators can also let their spending get out of control at times due to the wealth effect of having created assets that can lead to lifestyles that are more extravagant than prudent. Accumulators also make investment based on how the opportunities they come across resonate with their personal affiliations or values. Accumulators' risk tolerance is quite high, but when things go wrong, they lose money. Discomfort can be very high. The discomfort may arise not only from financial loss, but also from the blow to their confidence and realization that they cannot control the outcomes of investments. Some accumulators can be quite difficult for advisors to build close relationship with because their clients are making their own decision rather than relying on the advice and the counsel of their advisor. These clients are entrepreneurial and often the first generation to create wealth, and they are even more strong-willed and confident than individualists. Left unadvised, accumulators often trade too much, which can be a drag on investment performance. Furthermore, they are quick decision makers but may chase higher risk investments than their friends. If successful, they enjoy the thrill of making a good investment. Some accumulators can be difficult to advise because they do not believe in basic investment principles, such as diversification and asset allocation. They are often hands-on, wish to be heavily involved in investment decision-making process. The behavioral bias of accumulators have overconfidence, self-control, affinity outcome, and illusion of control. With all that being said, this article is so powerful because as you are reading, you're trying to analyze and categorize what type of individual investor you are or who you became. So that's why the best thing that I can recommend to others out there is know what type of individual you are. It's nothing wrong if you are any of the four. Just knowing your strength and weaknesses is very important. And then look at the investment as a broad and trying to understand what investing is all about. Nobody knows what tomorrow is going to bring, only God. So trying to analyze and trying to think about the future too much, you kind of like get off track and off balance. And that's why it's so important when you put Christ first, when you put God first, everything else becomes secondary. So when you make decisions, we're not chasing investments, we are not chasing dreams. We are having a path, a plan written down, focused, determined, and then let everything else run its course. But it's always important to have goals. It's always important to have it written down, and it's always important to follow it. I wish you guys the best. Happy investing. Till next time.